Welcome back, and it's a time where you just sit back a little bit and reflect as to what's playing out in global markets as well. We're down around 0.7% on the Nifty. The Qs in the morning, early this morning, were negative, so they were pointing at a negative start in any case. We've done relatively okay in comparison to that. It's a very range-bound market. We haven't slipped in significant fashion, and that's exactly how some of the other markets have also done globally. In fact, Europe has opened up as well, all of them trading with mild cuts, if I can call it that. The Stock 600 down a quarter, DAX down around 1/3%, FTSE down 2/3%. The CAC, in fact, is up 1/3%, thereabouts. So that's the one index which is actually standing in the green at this point. Let me bring on board Jonathan Chazelle, Westminster Asset Management, joining us as to what to do in the kind of equity markets we're seeing and the uncertainty we're seeing. Jonathan, firstly, very good morning to you. Thank you so much for joining in, at least from where you're at. Give us a sense. What is it that you're doing at this point?
Hi, good morning or good afternoon. Yeah, I think it's extremely difficult, quite frankly, to quite work out what is going on with markets. Clearly, we had a very decent bounce in most global markets. You know, US tech is now already back up at new all-time highs. So what bear market? But yeah, I think basically, clearly the ongoing situation in the Middle East provides a very large level of uncertainty, and markets dislike uncertainty. So we get this choppiness depending on what comes out every day on the news flow.
Where do you see oil go, Jonathan? Because largely, at least, Asia and emerging markets are getting impacted because of the oil price spike. Where do you see it go now?
It's difficult to see it in the short term doing anything but remaining much higher than I think most analysts had previously forecast. Yes, on a medium to longer term, most analysts do predict a sort of a resolution and the oil price to rapidly come back off again as we see plentiful supply reach the market. But I think certainly we've been quite bullish on the energy space for the last 6 months or so. We felt energy was very cheap relative to other commodities. That's worked out quite well, but we do still think energy, and particularly oil, does look quite attractive. Yes, there's a lot going on and the price is swinging all over the place, but oil generally was looking, if you inflation adjust it, oil prices were looking fairly cheap. Yes, we do know about the plentiful supply out there, but we do think demand still looks pretty strong going forward. So oil prices, bar very short-term movements, I think oil prices will remain higher than most are expecting and for longer.
Jonathan, I'm not sure if you're the right voice for this, but give us a sense. Do you believe that it takes at least 2 months for supply chains to actually receive the oil which comes out or from its sourcing stations from inside the Hormuz? Does it take 2 months, and therefore is there merit in saying that the current oil prices is just a function of the sentiment which is playing out, and that actual supply will get hit maybe much later?
Yeah, I think that's about right. I think that seems to be, they're all saying that the tankers that got out just before the conflict started are now at their ports pretty much everywhere and are emptying out. And, you just have to look at over here in Europe where there's, a lot of airlines are cancelling flights due to a shortage of aviation fuel. And I think that problem's only going to get worse. It's very difficult for other suppliers, the Middle East, to rapidly increase production to make up for the shortfall. The tankers are obviously in the wrong place. So it's going to take a lot of time before this whole mess sorts itself out. And I think ultimately the world has changed. And as we've been talking about for some time, countries have to just relook at where they're sourcing raw materials or other products from, and you need to build in a lot more resiliency, and that's going to take time.
Are you of the view, therefore, that you will likely see demand compression happen globally, and as a result of which growth is clearly under attack globally?
Yes, I think that we're beginning, like we're seeing in, for example, aviation fuel. There is certainly some demand repression happening. I think if oil price heads much higher, I guess the bigger worry, yes, there will be some demand destruction going on in energy, but the feed through onto food prices, there's obviously a strong link between energy prices and food prices, and that hasn't really started to come through yet, but that will certainly come, let alone the issues around fertilizer that we've all read about as well. So I think down the tracks, there will be a food price issue, inflation issue coming, which again, if you look at longer term and short, even medium term inflation expectations, the market just isn't buying that at the moment. But we do see there are severe risks of much higher inflation ahead.
And Jonathan, give us a sense, therefore, have markets been far more resilient than what you anticipated with the evolving situation?
I think the US market in particular obviously has obviously regained its leadership role, is pushing out to new highs. To be fair, you haven't seen necessarily any margin. You've seen the rating of the US market has actually contracted, but what we've seen that's driven it higher is earnings. The earnings expectations have been revised up quite aggressively. It's difficult, if you build in a scenario of higher input costs and higher costs generally, it's difficult for us to see that actually will play out, apart from maybe the next quarter. So I think there is a level of complacency in markets. The market is looking through this issue as that's a short-term issue and it'll go away. So we are a little bit more concerned on that, but we'll see, how it plays out.
Okay. And Jonathan, therefore, should one be cautious currently if someone is looking at equity markets, especially here in India? I know you do have views and therefore trying to get your sense. Should one be more cautious at this point, given that there's no real resolution as such, which has been inked yet? Or do you believe the market will likely look through this and say that supply chains will rewire and things will get better going forward?
Yeah, look, I mean, energy markets have a very, they're incredibly efficient about rewiring things pretty quickly, but I don't think it's going to be that quickly. So I would agree. I wouldn't necessarily say go underweight equity, but certainly anybody who's sitting on decent profits, bring it back to neutral. To a more conservative weight is probably suitable. Obviously, markets like India, did come off a little bit more than perhaps some other markets. India, Europe, the energy dependent places have obviously got hit harder, and they haven't rebounded as much either. So to a degree, there is some of this. These issues are in the price. If you look at, for example, a stock like L&T, which has rebounded very strongly, I think, I look at that the level of rebounding, and it's a little bit difficult to comprehend, quite honestly. As you mentioned, nothing really has been resolved in the Straits, and this could go on for some time.
All right, Jonathan, thank you so much. This gives us a great perspective. Thanks so much for coming in and speaking with us. All right, viewers, what we'll do is slip into another very short break. We'll continue coverage on the other side. We'll start to talk stocks, and especially with regard to Indian markets, try and understand what's moving and how to look at this going forward. Stay with us.